Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, November the 16th. It is Hump Day. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. We create multiple hypotheses in order to have a plan in place for whatever the market throws at us. That way we don't have to think about what we're going to do. We already have a plan and levels that we're looking at as the market plays itself out. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. It is a self-organized learning environment, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. I think I did that twice. I'm very tired. I was up until 3 a.m. trading last night. Okay, taking a look at yesterday. Yesterday, our Hypo 1 had a alternative, which we called Hypo 1A and Hypo 1B. And basically, they were both the same hypo. It was just how far we were actually going to dip down to find the buyers. Hypo 1A was a move down into the 57 to 53 area, find buyers, and rotate up through value and through range and break out and go and hit that 75, which is our main target above, and then a move up into between 75 and 78. Hypo 1B was a failure. It was an open test drive and a failure to break inside of the value and then break out a range and then rotate up and go up into that 85 area. Hypo 1B is what basically played out, but it played out very, very, very slowly. We came down, we failed to get back below the 63, which was the value area high from the prior day, and then we just struggled at the 68. We basically chopped between the 64 and 68 for most of the day, and then finally late in the afternoon we broke out and we finally started running, and they had a nice move up. It was a beautiful setup. They started stuffing the bid at 68.25. I announced it in the room, and then they chased it up, and we got this nice move up into 77, went sideways, created the double distribution day, and then moved up. And then in the overnight, I said that we'd likely get continuation. We had the zipper measured move up into the 84.50, and I said likely get the move right into the 85. They went to 85 to the tick. So we now have an all-time high that has been put in the RTH and in the Globex and is a double top. That is a weak high. But since then, they've sold off and they've come down, and they're now trading down in the 71 area. I talked about this last night, where we've got this double distribution zone and this low volume node, okay, that basically runs from 69.25 up to 74. And don't be surprised if we get stuck in this area this morning and chop around in this low volume node. Below 69, target the 67.50. 63s, anything below 63s, look for a move down to the 58.50. We get into the upper distribution and move up into the 75 and a push up to take out that all-time high up at 85. But that's getting ahead of myself. Let's just step back, take a look at the news. We had Canadian manufacturing sales came out at 0.3 versus expected minus 0.2. A nice beat there. USA, we had the PPI and the core PPI, and again, they came out less than expected. 0.3 came out at 0.0, and 0.2 came out at minus 0.2. 9 o'clock, we've got Great Britain Cunliffe speaking. And then 9:15, we've got capacity utilization, industrial production. 9:30, we've got Great Britain CB leading index. Then 10 o'clock will be NAHB housing market. But the big news this morning is going to be the crude oil inventories at 10:30. Crude has made a bit of a run and seems to found some support and moving up. Other than that, we don't have much more going on in terms of scheduled news, but of course there's always news risk with what's going on right now in the with the election. Okay, let's just step back, as I always like to do. I'd like to start my day with a simple candlestick chart, 9 EMA, 20 SMA, looking for slope and separation. I'm looking to see where we are within the trend on the multiple time frames. I start with the monthly, work my way down into intraday. You can see on the monthly, we are continuing to set up for this Rising 3 pattern. Go to Balkowski's website, the pattern site, and you can look this up. This is a classic candlestick pattern. It is on the monthly, so it's on a very large time frame, but this is a continuation pattern to the upside, and we still haven't closed the month. We still have a couple weeks to go, but if this candle turns out to be an engulfing bullish candle, this is a continuation pattern. As it stands, we are above the 9 and the 20, and we do have continuation going after having a long multi-year upside trend, and then challenged at the end of 15, beginning of 16, and they've taken it back. Going to the weekly. We're starting a downtrend coming into the election. The election came, we went limit down, and then we've had 152-point range on the prior week, and so far this week we're holding above the 9 and the 20, and we're getting a continuation pattern on the weekly. Trend is intact. We are on the daily. We have good slope, good separation. Prices paralleling the 9 quite nicely. It looks like we're going to get a continuation move. To challenge the trend, we'd have to come down in the 2055 area, and that's not, something that's out of the question. Just we're finding some pretty strong buyers in the last week. We do have this naked cross down here that was created on the election night down at the 21-24.50. So if we break below that 33, and I'll show you why, I'd be looking for a move down to the 21.24. I'm actually looking at the 21.20 area, which is the low of the microcomposite value area. Going to the intraday 4-hour, we worked our way up and created a technical gap, came back, tested this, bounced, and then they've basically been going sideways, and we're currently right now just below the 9, coming down to test the 20 and move down to the 20 will take us down into that 67.50. That's the HVN of the lower distribution and the naked VPOC from yesterday. Going to the 1 hour, you can see that we did roll over. This was a beautiful, this is a classic example of a FUBAR Mr. Sneaky. This is on the 1 hour. We get the push up, create the technical gap, have an inside bar, and then we roll over, we come and close the technical gap, and then we get the continuation pattern. We have left a naked cross above us at 76.50, but right now we have a possibility of a start of a downward trend, although we are getting a possible FUBAR Mr. Sneaky here, and technical gap close will take us back up into the 75 area, which is the HVN of the upper distribution from yesterday. Going to the 30-minute, you can see we have a nice trend starting on the 30-minute. Again, there's that FUBAR Mr. Sneaky. You'll see it show up on every time frame on the intraday, and we've got a downward trend started on the 30-minute. On the 15-minute, there's a gold long. On the 15-minute, again, FUBAR Mr. Sneaky. This technical gap took a while to close, but man, when it closed, we've got great trend started, good slope, good separation. Trend is very strong on the 15-minute. And then on the 5-minute, this was the one that I took the trade on. I missed the move up. I had to run out. I was at the doctor's appointment over in Michigan with my daughter. Came back and they made this run, and I saw the Mr. Sneaky, and I got short. And then we went sideways, and then they rolled over, and they've had a downward trend, but we are finding some support down here on the 5-minute. Excuse me. Okay, so let's take a look at the big picture. Here's where we are. We have broken out of the value area of this microcomposite that runs from the breakout day from the prior balance area down here. We gap up, we start the profile on the breakout, and then we come up and we create this beautiful balance area up here, try to break out, try to hold value up here around the 72, and then we fail, come back inside of balance. We've got a smaller time frame microcomposite in the little black area, and this microcomposite VPOC is down here at 32, shorter time frame even still 33.25, but the overall microcomposite that engulfs all of this, the point of control or the most traded price in this whole time frame is down at 52.50, and then we come up and we create we have this big day right here, which was the day last Thursday, and we run up and we run through value. Then we balance for 3 days. We accept price higher in around the 60, 75 area, and then we break out and we make our breakout and we go and put in a new high, albeit being in the Globex at 85 overnight. Now we've come back into this distribution. Our key line in the sand is now below us. It is 66 still, and if we hold that 66, we're looking for continuation up through to take out that double top at 85 and go up and hit the unequalized, unadjusted high up at 91.50 and continuation up into the 2200. We're likely to find some balance here today. Now that we've come up, we need to accept price on the breakout, and we're likely to get a rotational day today. That doesn't mean that we can't go up, but we're likely to find some balance in that low volume node from yesterday and chop as we mature this part of the distribution, and probably even come down and test the 66 is not out of the question. Below 66, then we're likely going to have to come down to find buyers where they accepted the buyers just before the breakout, and that's at the 60-75 area with a little bit of a CLVN just below a 59. Below 59, then I'm looking for a trip through this value down towards the most traded price down to the 53, and then our next big support area comes in down here at the 43. Anything below 43, that's where you're looking for a move down to 33, and if 33 does not hold and we do not bounce, then expect that move down to that naked cross down in the 24 area, but I'm watching the trip and a take back of this day and a move through value down into the 2120 area. And then the next support below that comes in at 2108.50. So taking a look at the overnight, you can see that the overnight session, we close near the high of the RTH session, then they go and they chop around that high, and then they break out. They go and put in that double top at 85, create the Fugler Mr. Sneaky, come back, go sideways, and then we break inside of the value. I said if we broke inside of value last night, we'd likely take a trip through the upper distribution, and if we didn't bounce off of the 74, they did a couple times, but once the Europeans got at it, we broke through that LVN at 74.50, and we took a complete trip right through this this low volume area, and now we've created price acceptance where there was price rejection, and this is a classic example of this. We had to come back and re-auction this territory because we blew through it. Now they come back and they auction it in the overnight, and we're getting this this lower distribution of a triple distribution overnight, and we're likely to see a VPOC shift at some point in time down here to the 72. We still have about 33 minutes to go before the RTH session opens. So if we come up and chop around in the 72 a little bit longer, we could see a VPOC shift from 77 and a quarter down to the 72. We do have the naked VPOC below. So if we break below the 69, I'm looking at the range low now at 69. And if we break below that, the next big target below is the CHVN, or the HVN, and the VPOC from the lower distribution of this double distribution day. And then 66 is our key line in the sand. Below that, look for them to come down to the 63 area and most likely come down into the 60-75, and then see if that 59 holds. Below 59, we're looking at the 53 area. Okay, so let's take our overnight numbers and start moving them over. Our overnight high obviously is up at our all-time high in December. This will change here so I can get rid of this here. So our overnight high is sitting on top of the all-time high. And then we have our overnight low is at 69. We have 30 minutes to go, and we're only 6 ticks above it. So that could expand lower. So I don't know, if this is going to hold. We're likely going to see the overnight low get expanded prior to the RTH session, or make and break on the overnight or on the open of the RTH session. We have an LVN here at 74. That basically is right at this LVN right here. I'm going to use the 75, the value area high, down to that. And I'm also going to use the 69.75 down to the 69. And that is our IB low, the LVN, and this whole area right here, okay, becomes no man's land. Do not want to try to enter a trade inside this area. But if we're above 69.75, look for them to get long and get a move through. And I would target the mid at the 72. Is it 72? 72? 72. It is 72. I just like saying that. 72 and a quarter. And then above the 74, we got to start looking at the 74.75, but I'd be really targeting the range high from the prior day at 79.75, but I would fund right here at the 77.50 area. And then above that, we've got the naked VPOC at 83.75, the overnight high at 85, the all-time high, and then this unadjusted high. The daily 20-period ATR is running at 26.69, so currently off of the bottom of 21.69, 26.69 takes our daily upside ATR range target up to the 95.75. And off of the overnight low, the overnight high of 21.85 minus 26.69, our daily downside ATR is down at the 58.25, just below this naked VPOC. And okay, so we got that. We're below the 69, we're targeting here. Secondary target is yesterday's open at the 65.50. We opened and closed the last couple days within 2 ticks of each other in that balance area. So if we don't if we don't hold the 67.50, look for them to come down here. And then, of course, the range low at 63 with the value area low at 63.50, and anything below that, target the 61, and then the 58.75 with the 57.50 needing to hold below that. And then everything is good below that is all about this 53 area and coming back into the microcomposite point of control at the 52, 50, 52.75, 53. And then below that, you've got the weak low, the double bottom off of that Thursday at the 47.75, and a break of that takes us down into our key line in the sand at 43.50, and then 40s, 40.75, 38 and a quarter, and the next big target below is 33. All right, so those are all the levels to the upside, to the downside. To the upside, we don't really have much to go on above the 85, except for that 91 and the daily ATR. Of course, we've got the 2200 and the rule of 10 if we break into 2200. So what is my main hypothesis for the day? I'm looking for a rotational day with the possibility of getting an inside day. So Hypo 1 is an open auction in range, a move down into the lower distribution, come down and test the low, get maybe a false breakout, and then find buyers and rotate up, chop inside of the low volume area, and then come up and test the upper side of the day with maybe a late day probe up into the 83 and a break of the 85. So that's Hypo 1, open auction in range, chop, push down into the lower distribution, test the lower distribution, auction that, then find buyers somewhere between 63 and 58. Possibly hold the low, but rotate back up, and then right through the LVN area, chopping in there, and then coming up into the upper distribution with a late day probe up into 85. Hypo 2 is a open auction in range, failure to break down inside of the lower distribution, or just come down to the 67.50, find buyers, rotate up through, break out of the 80, the 2180 level, and then push up into new all-time highs and come up and close somewhere up here in the mid to high 95 area, the mid 90s. So Hypo 2 is open auction in range, failure to fully auction below, finding buyers between the 69 and the 67.50, rotate up through, auction the upper distribution, and then push through up into the new all-time highs and close somewhere up in the mid to low 90s. Hypo 3 is an open auction in range, a push down, auction the lower distribution, and then fail and break the 63, come down into the 58 and chop around in this area with possibly push back down to the 53 area as a late day probe. So that is Hypo 3. Hypo 4 is an open drive up through the low distribution, chop in this distribution, and then get a continuation day and trend up through into the 2200 area. And then there's going to be alternative 5, and that is basically going to be failure and a take back day and a move down through, break below 63, push through to 58, chop here, and then push through and come all the way down and close somewhere down here in the 2140 area. So those are my main hypotheses. I know it's a lot, but right now we're in this downward trend. Whether or not that we find those buyers coming into the RTH session, we don't know. We do have a downward channel that we're in right now, and test of the lower Keltner line is going to take us down into that 67.50 area and back into the composite or the naked VPOC. Keltner center line is up here in the 73. By the time we get there, probably going to be around that 74 area, and a break above that takes us up into the 78, 79 area. So that's going to complete our pre-market session. Again, I'm very tired. I did not get any sleep last night because I was trading this. So I'm going to be in and out today, but I'm going to close this down. I'll close the room, get the recording, and I'll reopen the room, and I will be here for the open and the first hour of trading, and then I might start to drop off. Anyway, trade well, trade safe, and we'll catch you on the flip side.